Hey guys, welcome back to my channel. How are you all doing? Hope you had a great week this past week, as the market gave us plenty of opportunities to capitalize on. In this video, I want to talk about my analysis for gold for the upcoming week. And as usual, I'll start off with the weekly time frame and work my way down to the 4-hour time frame where I normally take my entry. And I would say, continuing from last week we said price was ranging a bit, and I was expecting price to continue to the upside. And that's exactly what happened. Price went up to test the 2070 zone over here, which we can see has been a strong resistance area, testing that area multiple times. So this zone here is a very key area for us. I'm just going to label that as the 2070 zone, so that we know we're going to get a very key significant reaction anytime price gets to that level. And if at any point price does break this level, it's going to be by a very strong bullish candle that will break it to the upside. And once that happens, you just know price is just going to continue onwards to the upside. Again, looking at the weekly time frame, we can see that price has been in this uptrend. So even if we draw a trend line there, just to connect, yeah, you can see that price has been in this uptrend, forming this higher highs and then higher lows, and then forming this higher high again. And then usually what follows a higher high would be a retracement to form a lower low before price, breaks the previous highs and then continue, or, starts to fall depending on what happens. Okay. So this is what we are seeing at the moment. This is where we're at. So if price does retrace on this weekly time frame, remember this is a weekly time frame, there is a significant area here. You see all these areas where you have the wicks, right, just protruding into that zone there. That's a very significant zone where if price does retrace, we expect price to get into that zone. So if I mark out that zone where you have the wicks, it's because we're looking at the weekly time frame, it's a very wide area, but then again, it's a very significant area that if price does at any certain time enter into this area, I would advise that you only look for buys, because there would be a lot of buy orders down here, and these are what the big boys play with. These are not orders that will be filled in the next week or two. It probably would take a couple of months, 2 months, 3 months for that to happen probably. But just know, if at any point in time price does fall back down into the between the 1970 and 1930 area, that is a very key zone as well, and that's on the weekly time frame. So I'm just going to label that. That's the 1930 to 1970 to 1970 zone of interest. Right. So this is a very key area there, up there. Now, if we move to the daily time frame, and then again, when you're looking at the weekly time frame, this setup mostly is for those who are more or less position traders for gold, looking at it in the long term. But looking at it as a swing trader or even a day trader, I will go to more smaller time frame. So looking at the daily time frame, we can see that price got to that resistance area there around the 2070 zone, rejected off, from this off doji candle, followed by this bearish candle. And then if you know about candlestick patterns, one, you know that this bearish candle that was formed is more or less an engulfing candle, completely engulfing the body of the previous candle. And then looking at these three candles together, that's this bullish candle over there, followed by this doji, and then the bearish candle that is an evening star, that's more or less bearish reversal candlestick pattern. So taking that into perspective, that again, then again is saying most likely price could fall to the downside. All right. Um, Again, giving a more or less like a retracement that we've already talked about anyway, saying that price getting there is going to retrace back down into this zone of interest here, and then possibly bounce to the upside because we've got a lot of buy orders down there. As you can see, this area is quite significant. Okay, so daily time frame, as we're looking at it, given the candlestick pattern that has formed, given also that we can see this sort of double top pattern over here as well. We can see price coming down here, going up here, and then then again the next move we would expect is for price to continue to the downside. Okay, possibly back down to this neck or into the area of interest that we're expecting price to get to, which is within this zone. So then again, keep this zone in mind. So we have three things already that is pointing out that price will be heading to the downside from what we saw on the weekly time frame and now on the daily time frame. So if I take all this off and then we head to the 4-hour time frame, this is where I normally look for my entries. And I'll show you what I took last week on gold. And then I'll show you what I am expecting this coming week for gold. So looking at the 4-hour time frame, we can see that last week I did mention that price entered into this sort of range over here, where price kept ranging between this 1980 zone and then the 2012 zone. That's where price was ranging. I said price could either break to the upside here or break to the downside and then continue downwards. So what happened eventually was that price broke to the upside, came back down to retest this area, forming this bullish pin bar, and that's why I took my trade, and then all the way to the upside. The price got all the way into the 2070 zone here, although my take profit was just at the next resistance area, which was the 2046 area. So and that was the trade that I took last week. Now with this trade, that or what we can see at the moment is on price getting there, you can see that there was a retracement, and what we can identify here is this sort of double top pattern as well, and then price coming down back to test this resistance on support. So now this is now a support area. So we can see if we had traded this earlier, or if you had seen this trade last week, you could easily have traded this by entering your trade somewhere just here, and then take stop loss there, take profit down there. You'll be looking at around 300 pips on that particular trade. So that was a very good trade if you had seen that earlier. So where are we currently? We are looking at what we've discussed earlier in terms of the weekly time frame and the daily time frame, saying that price may end up retracing back down into this area of interest here. As you can see, this is a very wide area of interest, so we would need to narrow down where exactly in this zone we expect price to reverse from, and I will show you that as well. But on the 4-hour time frame, we can see that price now is sitting on this resistance or this support area, which was previously a resistance area in a range, and on that area price has formed this bullish pin bar. Okay, so looking at this, and then again, if you draw your Fibonacci retracement from the swing low here to the swing high, you will see that that area fell exactly or falls exactly on the 61.8% Fibonacci retracement area. So even this is expected that when price gets to this Fibonacci retracement area, you expect to see a sense of bounce to the upside. Okay. Yes. So now this is what we're looking at. So But then again, you would ask yourself, I said that mostly price is going to head to the downside. So why am I saying um, that price would move to the upside? Yes, in the long term, I'm expecting price to continue to the downside, eventually into this area here. But in the short term, looking at this at the moment, I'm expecting that price would bounce a little bit to the upside for now, and that trade we can capitalize on. And the question now is, where am I expecting price to get to? Okay, where I'm expecting price to get to, for me, I would say is within this area here, where you had the neck of the M pattern, right? So I'm expecting price to get into this area here at least, and possibly bounce from there back down to the downside, break that level and break this zone as well, and then entering down into that area. And when we get into that area, it's now time to now look for where exactly in this zone we should be looking to enter our buy trade. If you can fill all these orders with buys, then for me that's fine, because I expect trade to continue to buy. So the reversal can happen here at this support level there. It could be at this support level there, or it could be at the next support level there. But my suspicion is that it's most likely going to happen on the last bit of it. Okay, it would happen in this zone here, which has been tested previously. We can see that once we draw our zone there, we can see that that level was tested there, broke through, it came back into that zone to test it, and then we're expecting price to possibly come back all the way into this zone. It may not happen as smoothly as this, but once it does, it will correspond with this trend line as well, and then we'll be looking to take our buys from there. So all these are predictions in the long term, but if we're going to trade immediately, or what I'm looking at for this coming week is price entering into this zone. Again, just to get more confirmation of this particular up move, one is price being at this support area. That is one support. Two would be the formation of this bullish pin bar. And three is if we draw our Fibonacci retracement from this swing low here, or swing high to the swing low, we can see that that area there that we've drawn falls exactly at the 61.8% Fibonacci level, or the 0.618 Fibonacci level, which we know is the golden ratio. So and that's why I'm expecting price to get into the zone at least, and possibly continue to the downside. But in the meantime, that is where I will be targeting for my gold trade for this coming week. So I will enter here, take my profit there, about almost 200 pips thereabouts, right? Or 190 pips, and my stop loss will be just below that area. Okay, so this essentially is what I'll be looking at to take. On the other hand, if you're not comfortable taking this buy trade, that is fine. You can always wait for price to get into this Fibonacci area here. See if price gives us a sort of reversal pattern. If price doesn't give us a reversal pattern, we can still wait a little bit and see if price maybe gets right into this zone, because there is another zone here that I didn't mark out, but there is another zone there that price could possibly get into. And if that happens, then you can look for another buy trade there as well, and then possibly take price all the way to the downside. Okay, but at the moment, at least for the next couple of days, I'm expecting a bullish trade on gold, and then I will give an update later on in the week to see if my bias has changed at any point in time. So this has been my analysis for gold. I hope you've enjoyed this video, and I hope it's been helpful. If you have, kindly leave a like, and if you haven't subscribed, kindly subscribe to the channel for more analysis videos. Thank you very much for watching, and have a good week ahead. Peace.
Know just what you do to me. Play my emotions like a pair of puppet strings.